Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual guys, this is not financial advice. Please do your own due diligence and research. It is a Sunday, a little bit depressing, the market is closed. But I have some dynamite information for you all today. You see, I've said it before that I did not go to school for business or finance, but how did I know that I found a diamond? How did you know you found a diamond? Some people recently coming out and they're losing faith, some of you all. And they're saying, well, Mitch, what if they come up with a battery that can last a lifetime? You see, do you want to wait 15 minutes to supercharge a battery or 3 minutes without having to come out in the cold? For the ladies, do they want to get their hands dirty while you have your little kid in the back seat freezing for that 15 minutes like we saw in Chicago? Hold the line, lions. While the shorts are coming out and telling you Money Making Mitch is lying to you. He's getting paid from Neo and all kind of madness and nonsense. What are the big corporations doing? If Money Making Mitch is wrong, they should also be wrong. Well, listen up. There was one pension fund in Canada that just tripled down on Neo yet again. Prudential PLC increased its holding shares in Neo by 91.9% during the fourth quarter, according to the company, its most recent 13F filing with the SEC. This is why I'm telling you guys, this is the game that they have played. When I was young, I didn't understand the game. Now I'm old, I understand the game. I wish I had this knowledge that I'm giving to you guys when I was your age. They continuously tell you to buy high. The company's established now. Buy now. Don't buy while it's growing. Don't worry about future projections, they tell you, and I say no. The institutional investor owned 341,000 of shares stock after acquiring additional 163,328 shares during the period. Prudential PLC holding in Neo are now worth $3,093,000 at the end of the most recent reporting period. Several other institutional investors have also made changes to their positions in Neo. HSBC Holdings PLC lifted its holdings in Neo by 238.6% during the fourth quarter. You heard that right. They now own 7,062,460 shares of the company stock valued at $64,070,000. I guess they are foolish too. The shorts need to go and convince them. Institutional investors own 40+% shares of this company. But they're telling you don't buy. Stay poor and die poor, they tell you. Electron Capital PLC Partners also bought new shares in the third quarter worth about $37,918,000. Norges Bank bought new position in shares in Neo in the fourth quarter worth about $9,642,000. Linden Advisors LP bought in the third quarter a new position about $8,972,000 worth of shares. Finally, Corner Clark and Lund Investment Management. Notice this is not Chinese pension funds and stuff buying. Notice that. In the third quarter, worth about $2,899,000, 48.55% of the stock is currently owned by institutional investors. So, before I continue with this video, I want you guys to take a little look at this clip and then we shall discuss it. Take a look, guys.
Here and what it could mean for both Neo and Tesla shareholders. Let's take a look.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, so Neo launching its lower priced Envo brand, a family-sized SUV aimed at Tesla. Let's take a look here. Co-founder, chairman, CEO saying that the current plan, when we started to launch and deliver the first product in September this year, they're going to open up around 100 stores in China. The first product is going to be the L6. It'll be directly competing with Model Y, Tesla. directly competing with Model Y. And then next year, we're going to introduce the second product, a mid-size, larger SUV for bigger families. So we will not have many products in this offering. We will be focusing on enhancing the market share and also the sales volume of each product in their respective segment. So not only are they introducing this new model, which is a direct competitor to Tesla, the Model Y, but they're also going to really focus on enhancing the market share of this product. They're going to put their energy and focus behind this product. It's not going to be one of many that they're going to launch on this brand. So already Tesla was having difficulty with growth. In fact, it was decreasing due to this increasing competition. And now this is yet another product aimed in the market competing against Tesla. Of course, in the most recent quarter, let me make this smaller so you could see, Tesla's deliveries, Model 3 and Model Y deliveries, were down 10% year over year, 369.783 thousand vehicles delivered in the latest quarter, and that was down from 412,000 in the same quarter the prior year. So September is still a few months away, so it's not going to impact Tesla's second quarter directly, although indirectly it might. Let me explain how. Some customers that are in the market shopping for that mid-sized SUV or small family-size SUV, electric SUV, they might look at this Neo offering and say, should we wait instead of getting that Tesla right now? Should we wait for September for this newer model from Neo? Is that a choice that's attractive? For some, it will be. Undoubtedly, some consumers will say no to Tesla and yes to Neo, and vice versa. Some will say no and yes to Tesla. The car market is an interesting one because it's not based only on the specifications of the car. Here's what I mean by that. Car buyers, and you could think of yourself in this matter, they don't just look at the specifications of the car when they make a purchasing decision. They don't just say, well, what's the 0 to 60 time for this car compared to this one? What's the mileage for this car versus the other one? What's the price per mile that I'm going to end up paying for this car versus this car? What's the weight and, the specific dimensions and specifications of the car? A lot of it is based on taste. A lot of it is just based on taste. People look at a car and they look at the other car and they say, this one looks better than the other one, so I'm going to choose this one. As long as the characteristics are similar and not that far off, the specifications may not make that big of a difference in the decision-making process. Look, taste, appeal, brand might make a bigger decision-making criteria. It all factors in. What I'm trying to say is it's not all specifications. That's why with each new model that comes into the market, it just makes competition that much more fierce because it's just another option that consumers can choose from. And some consumers undoubtedly are going to look at that new product, that new model, and they're going to be attracted to it. They're going to like the way it looks, and they're going to choose it, and they're going to buy it. And so that takes away from the existing participants in the market. And in the last 2, 3, 4 years, there's been so many newer electric vehicle models coming into the market that competition is off the charts. It's the most competitive market I could think of right now, the electric vehicle market, because so many new models and new companies have come into the market, which was already oversupplied to begin with. The car market overall, not just electric cars, the overall car market was already oversupplied coming into 2020. And then with the popularity of electric vehicles, given the government stimulus and the billions of dollars and trillions of dollars of investment that went in, that just created even more supply. So you've added more supply to an already oversupplied market, and now you're seeing the impacts. You're seeing lower sales for existing participants. You're seeing price competition. You're seeing falling profit margins, and it's been bad news for every participant. And this, again, will just add to that trend. It will be bad news for Tesla because now you've got yet another model coming into the market. Some consumers will choose it, even though it might not be as good as a Tesla Model Y. It might be. For some consumers, they will choose it. They will choose it, and that will make it harder for Tesla to make those sales. And so, interesting developments here from NIO with this new product coming in for September. For NIO, it will likely be a positive because they need wider production in order to reach economies and scale so that they can potentially get to break even on the bottom line. They are still losing significant sums of money on the bottom line. And so they need more sales. Tesla's already profitable. Tesla's already achieved profitability and positive cash flow from operations. They can still be profitable even if they cut prices further. And they can really heat up this competition by cutting prices further and just waiting for these companies, these EV companies that are on a weaker footing, to go out of business. That will take a long time because these companies like NIO and others in the US, they are well capitalized. These companies received billions of dollars in funding because of the electric vehicle frenzy in 2020 and 2021, when investors were just buying these stocks, even though they were losing money on the bottom line, even though sales were not that large. Investors were just so enthusiastic about these electric vehicle companies that they just poured billions and billions of dollars into them. And so it's going to take a while for these companies to lose enough money to throw in the towel. It won't be this year. It won't be next year. It will be a while. Some of the weaker players, you're already seeing them go out of business. But for these larger players like NIO, it's not going to happen, and not anytime soon, I should say. It might happen several years down the road, where if they continue to lose significant sums of money, they say, okay, let's give up. There is no hope. But it's not going to happen anytime soon. And with these new products at a lower price point, wider production lowers the cost per unit, and that could potentially bring them to.
Alright guys, welcome back to my channel. So this is what I was trying to say. These 3-star analysts that are telling you don't buy, in his video before this that he did this week, he said NIO is still not a buy. They cash burning. Now you see his tongue twisting in his mouth like a viper. And I told you guys this was going to happen. This company is going to make me a millionaire. I don't know about you. And this is why I keep buying shares every single week, even if it's 3 shares. On Monday, tomorrow when the market open, I'll be buying $238 worth of NIO again. And I'm still waiting for my Bitcoin money to clear because I see the vision and I understand the business model. So this guy was saying that you should not buy. And I told you all he's a 3-star analyst. He's spreading propaganda. This is the game they play. And I'm not listening to him. He's a poop of ocean. He's pooping in his pants. And now he's admitting that we're coming to steal market share away from dog poop, rat poop, cat poop, and bat poop. Tesla, yes, guano, bat poop, smelly bat poop. He's now admitting it. And as time go on, you'll see his tongue twist again in his mouth and saying, they're really picking up. Watch, and you will see money-making Mitch, who did not go to school for business, who grew up in a house made of dirt and came to America with $300 and half a suitcase of clothes, just like you struggling, is right. And we're going to become millionaires. And the rest of the people who always listen to the 3-star analysts and the propaganda will stay poor and die poor. So I hope this video brought a lot more clarity to you guys. I hope it was informational, inspirational, and motivational on a Sunday. If so, guys, do not forget to hit that thumbs up. It takes